And now it's time for your earnings update for the week, or actually all the earnings update that I want to share with everybody for this week. Let's begin with IBM, which most people actually don't really care about IBM, but they had a surprising strong earnings result for the last quarter. It's actually their strongest earnings in over 3 years. In 3 years, this is the best earnings that they've reported. They surprised everyone with announcing earnings or revenue of $18.75 billion, which was $400 billion more than was estimated for them to bring in. And the key aspect of their revenue growth came from, as you guys can probably guess it, if it's a tech company, cloud. Like, that's where everything came from. If it's a tech company, it's cloud computing. That's where most of their earnings came from. Now, of course, they're behind all the other they're behind other cloud providers like Microsoft, Google, and Amazon. But at the same time, it's good to see an old dinosaur learning new tricks and actually doing better in their business. They also made an acquisition for a company of $1.75 billion. So that was pretty interesting to hear about. The only reason that I care about this one is just because it was shocking. It was like, oh, wait a minute, IBM. Y'all beat expectations. That's unexpected. Y'all trying to do something new. We like to see something new from y'all. Next up, we have Netflix, whose news was not as good as IBM. Like, everybody was celebrating IBM, but Netflix, on the other hand, wasn't good news. Subscriber growth actually declined as people start going outside of their home. As we enter into a new post-pandemic period, people are not just staying at home. People are not just trying to watch anything on their TV. They're actually venturing out of their four-wall caves called our homes, because guess what? We have some freedom now, and that is showing up in Netflix subscribers number. Actually, they lost 400,000 subscribers in the United States and in Canada, which is the first time in their history that they've actually lost subscribers across those two in the North American area. They also added about 1.5 million new subscribers. However, even though they added 1.5 million new subscribers, it's not a whole lot, seeing as they already have like 209 million subscribers. It's the lowest output that they've had in the last 3 years as far as subscriber growth. On the other hand, we had Disney Plus, which has been flying out and doing all the good stuff. Like, Disney Plus has been releasing new and newer shows. And the pandemic has actually affected Netflix in that way too, where they haven't been able to release as many new shows as they need to release in order to either keep their subscribers or attract new subscribers. On the other hand, you have Disney Plus, where it's released Falcon and Winter Soldier, Wonder Vision. What else have they released? They've released so many different shows, and plus movies that just came out. For example, what is this movie that I just saw this weekend? Black Widow. All these different movies have come out, and everybody is kind of like, Netflix, you got anything for us? No? Well, I guess I can cancel my Netflix subscription for the time being, and that is really hampering Netflix. However, Netflix never really viewed Disney Plus or Hulu or HBO or any of these other streamers as their competition. Remember, we've talked about it before, where Netflix sees Sleep, Fortnite, YouTube, TikTok, Instagram as their true competitors, because they believe that anytime that people are not spending watching Netflix is them losing money, is the way that they've always seen it. So in that vein, Netflix announced that they will be going into gaming. As a matter of fact, the company has said, we view gaming as a new content category for us, because gaming has seen massive growth and massive adoption and continues to grow and grow and grow. So this is basically Netflix's way of saying, like, you're going to spend time on our platform. In one shape or another, we going to get you to spend time on our platform. You got to sacrifice something else. It ain't going to be your Netflix subscription. You can sacrifice sleep. You can sacrifice going to see your friends. You can sacrifice all of that stuff, but you're going to be on our platform. But overall, it's not good news right now for Netflix as their subscriber growth begins to plateau, even though they're still doing well overseas with adding that 1.5 million new customers. It will be interesting to see what happens with Disney Plus as well, to see if they also are plateauing as people are starting to go outside as well. Next up, we have Chipotle, or I like to call them the Potlay. Chipotle had great earnings results. Remember when the CEO came out and was saying some nonsense about the fact that, yeah, we got to pay our employees $15 an hour and it might hamper our growth? Apparently not. Apparently it didn't hamper your growth because y'all still brought in revenues of $1.9 billion. So apparently it didn't hamper your growth that much. And even more importantly, same store sales grew 31% in the last quarter, showing that as people venture out of their house, they're actually more willing to sit in and dine in at Chipotle, which continues to be a big aspect of growth for the Potlay. So all I have to say is I'm still willing to pay, 4% more for my chicken bowl so that you can actually pay your employees what they need to be paid. So please don't hit me with that BS of, we have to increase prices. You can pay. You can definitely pay. As you've shown us, it's not hampering your growth. People are still going to your store. It didn't stop anybody. So you can definitely increase it a little bit. From there, we move on to Coca-Cola. Coca-Cola is like, so glad. Of all the companies we talked about right now, Coca-Cola is the one company that is so happy. Like, they are so happy that people are going out, that people are going to baseball games, that people are going to concerts, that people are going to basketball games. We just talked about the fact that Milwaukee won the championship. They had over 65,000 people outside the stadium, not even inside the stadium. Outside the stadium, they had 65,000 people. Coca-Cola was like, thank y'all for coming out your houses. We need y'all to go to more little league games. We need y'all to just get out of your house. We need y'all, don't stay at home. Don't stay in. Go outside. It feels good outside. You should definitely be going outside. That's what Coca-Cola is saying to anybody, because one of the largest sources of revenue for Coca-Cola is actually concert halls, what they call them, stadiums, and those kind of places. That's where Coca-Cola generates a large sum of its revenues. And this quarter, it actually was able to reach back to 2019 revenue levels and actually top 2019 revenue levels. They brought in $10.13 billion, beating estimates by $1 billion. Again, it was not expected for growth to be this quickly, or for things to open up this quickly, and for Coca-Cola to see some of its some of its revenue come back this quickly. So much so that the CEO said, putting it all together, we realize there's a range of possible outcomes when it comes to the pandemic in the second half of the year, given the asynchronous recovery. While we over-delivered relative to our expectations in the first half and have raised guidance for 2021, we are biased towards a growth mentality and will invest behind this momentum going into the rest of the year. For the full year, Coke now expects to deliver organic revenue growth of 12% to 14%. That actually is very hard for a company as large as Coca-Cola to see double-digit revenue. Is very, very hard. But then again, when they're comparing it to what their revenue was last year, and I guess, then they can actually accomplish it. The company also raised its forecast for adjusted earnings per share growth to 13 to 15%, up from prior range of high single digits to low single digits. That's big. That's very, very big. It just shows that we are continuing to open up. And as we continue to open up, we'll see more good news from a lot of these companies. This is why whenever people are talking about, we're going to see a stock market crash, it's just like, the business fundamentals for a lot of these businesses are not exactly showing the same thing that people are talking about. This is why you can't pay attention to the noise of everybody. You have to also do your own research to understand what's actually going on around you. And finally, I was going to go ahead and talk about this J&J earnings report, but it's just too complicated, man. Johnson & Johnson's earnings report was way too complicated. They have some lawsuit going on. I just was like, you know what? If y'all want to learn more about it, I'm going to put a link down in the show notes. And if you're watching this on YouTube, I'll put a link down in the description. By the way, if you go in the show notes or the description, there's a bunch of free stuff. You can get free money. You can get free stocks, all kinds of free stuff. So definitely go down in there and check that stuff out. But anyway, if you want to read more about J&J, I'm going to put a link down in there and you can go read about it, because I just don't feel like, one, learning about it to be able to provide you guys any insights, and two, I don't care. Let me just be honest. I just don't care that much. So there's that. But anyway, that is your earnings update for this week. I hope you enjoyed that little snippet of the Rambling Mind podcast. If you want more of the Rambling Mind podcast, or if you want to listen to the whole episode that you just heard, go check it out on any podcast listening platform, whether that be Anchor, Spotify, Google Podcasts, Apple Podcasts, Breaker, Stitcher. I could go on, but you guys already know which podcast you love to use to listen to. So go check it out. Link down in the description as well. I'm gonna catch y'all later. Peace.